All right. Today, I would love to rant and talk about where and how this model I have here is wrong. And I'd like to talk about surprises, the most recent surprise, and what my responses to these are. Okay? So, let's open up with looking at the full model right here, where we have everything shown, and I will point out these green up and down boxes are when we are suppressed versus not suppressed, okay? And I find that the pattern that I try to stick to is three swaps, suppression cycle ends, okay? Um, I have learned the hard way that the swap not happening means we might go right back into suppression cycle. I've learned that twice. My two biggest losses have both been instances where the swap doesn't occur as typical, and then we go back into suppression cycle either briefly, right here and right here. We went right back into suppression cycle. Actually, we never left suppression cycle for this one, except for maybe you could argue briefly in the run up, and I will show what that looks like in the ETF model right now, where we start to track very briefly in the run up post earnings my most bullish model, but then we diverge right back into suppression because I believe there is a swap coming up and occurring on the 20th. But with a swap occurring on the 20th, hey, why do I believe a swap is occurring on the 20th when I believe in you, TradingView? We can get this. When the swapinator is peaking and the bottom finder are peaking both right now. Right now, right now. And that is a very compelling argument, honestly. One which I'm debating picking up positions early in response to be honest. But we've crossed below my line in which I would buy the shares. And then we've also, in post-market, that's S&P, my bad. In post-market, we dropped to 22.53 a share, which if you look at my cash on hand value, none of my models talk about the shares being even capable of dropping below. Let's go to the cash branch. I believe in you. There we go. None of this talks about us being capable of dropping below 22.63 a share. And so my personal opinion is we hit the no-no spot. The, hey, you're not allowed to go any lower than this. Everything's emptied out, and it bounces right back off in post-market. There is no lower that I've typically seen this stock go than 2 times cash on hand. And we almost always bounce right back off of touching that point. And so my point for buying was set to literally 80 cents above that point. And so we have bottomed out in every way possible on this stock. And so has warrant issuance here really been that much of a fuck you to the entirety of the concept of max pain? Because max pain for this week was 25 a share. On close, sure, the options market will have 1/10 of the value of the warrant inside of the option. That's fine. That's what, if the warrant is trading at $3, let's find what the warrants are trading at. If the warrants are trading at, here you go. If they're trading at $2.90, then that's 29 cents per option are warrant value. So why does the warrant issuance cause us to completely blow down under max pain? And I have a few concepts that could possibly explain it. The first one being that if you are given a free hyperlong asset as a hedge fund, your immediate response is to hedge. You are now going to start shorting the stock or shorting the warrants. Shorting the warrants is impressively difficult with all of them being tracked one for one. And so we short the underlying. Is that enough to add up to this exact crash? Well, let's look at the underlying. Let's look at the short percentage for GME. And then for GMEU, which is the single stock ETF, which trades GameStop, which is considerably easier to failure to deliver than GME itself is. I prefer chart exchange. I think I prefer chart exchange for both of these. And let's look at the short percentage. Short interest. Perfect. Perfect. What day are we at? We should be. It's not tracking daily on me. Let's look at short volume and see if we can find something interesting in here in this data. Okay. So we're at 32% short volume on GMEU. On 10-8, we were at 4%, which is undershooting. I don't actually believe this is percentage. I believe this is total short volume reported, which is not the same in any way, shape, or form. But just following the numbers, we are not in order of magnitude off of standard. We just aren't. So there's no massive short volume going on today in particular. Let's check the ETFs. Let's check the ETFs. I believe in you. Okay. If we are right on the 10th, right here, then we should see the combination of these. We are not at the bottom for the ETFs even. We aren't at the bottom for the ETFs, and then on top of that, for not just being at the bottom for the ETFs, we continue to decline until the 22nd. And so, yeah, we may have bounced off the cash flow or the company value, but I don't think we're going to go very far up until the 22nd when I believe in myself. Where are these? Here we go. Until the 12, 6, and 5 times the average addition or subtraction from ETF outstanding shares that contain GameStop are dropped off of the window for what has to be covered or closed for. And so when does that occur? Well, that doesn't occur until the 17th is the first day when it starts to drop off. And I actually believe the 17th might be a particularly strong argument for the day when I would want to pick up bullish options. So what does the 17th look like here? This is the 21st, this is 20th, this is the 17th. Here we are. So the 17th is when all of this downwards pressure starts to relent. And I believe if we include the 22nd, if I go into my calculation for the 22nd, for the model, which is an average of the 8 calculations, we minimize on the model, which is averaging these times together, a few days later, which is on the 22nd. Okay. So I'm not picking up bullish options for another week here, maybe. Like the 17th or the 20th, 21st, 22nd, those are fantastic days for me to buy bullish options, but even if I risk missing out on this bottom, or if I risk missing out on where are we? I can risk missing out on this bottom entirely in order to have the opportunity to wait until I think the bottom ends. Meaning, when I did the math on where a red swap would occur, this swap never peaked on the swapinator. The purple did, and then we flashed down into suppression on the purple. Then we came back out of suppression. If I show that on the full model here, I welcome myself to. Yeah. I would love to show it on here where I show the yellow chart here is if we are suppressed, the blue is the green is if we are not, and the blue is the price. You can see how we flash down into the 8 range I would see a suppression activity as. Okay. But that is for the purple swap here. Let's go right back into trading view, but that was for the purple swap. The purple swap occurred around 1 month after the red swap with, I believe the red swap was closed down and then the purple swap was entered. I believe that, yeah, it's that simple. If I take the typical gap you see in a red to red swap, we end up with the 22nd or so occurring as our day of interest. If we take the date where the red swap was supposed to occur and add in the gap between the red swap and purple swap, it's the same thing at that point, right? Okay. So my personal call out is I think the swap is on the 22nd. And I can be 100% wrong on this because we are peaking now. This is it. This is what a peak typically looks like. Now, it is not out of question for us to peak for a day and then go back down and then peak a second time harder. And this would be a number which, while high for a sub peak, would be possible. It's just not easy to trigger both of these models at the same time. Yeah. Okay. So, what am I planning? How am I diverging from my models? I diverge from my models the same way the S&P 500 did. If I open up the S&P 500, how did I lose money? Right here. If we go to the 5-day chart onto, actually, no, this doesn't show. That is so silly. I am wrong about that. Okay, fantastic. So on Friday, we undershot max pain, and the entire market undershot. That's completely reasonable. I was wrong here exactly, because I tried to hold on to the position assuming we would exit suppression cycle, and we did not exit suppression cycle. Into here, we are far too low for me to be interested in saying we're going to go down anymore, and we're far too far from what I see as positive pressure coming in for me to want to take any sort of option or leveraged play to say we're going to go up, unless you're buying warrants, which are hyper long dated, or you're buying shares raw. And I have some interest in buying raw shares because it's the lowest risk thing you could do to take advantage of all of this. But I see opportunity in this time period right here on the 22nd to 24th and expiring on November 14th. And I want to take advantage of that opportunity. So, what's my play? Yeah. I want stock below 23.50 a share still. I want it on the 22nd, 23rd, or 24th. Anytime after the 17th and before the 24th, give or take, or before the end of the 24th. I want to enter a call position. I'll probably be staking 100 to 150K on it, and I will have it in the money if we expire, still in suppression on the 14th, and I will be closing the position early, if anything, because I learned that we can and will crash when the full model crashes, even if the ETF model does not, that is. And so I want to exit this position by the 14th. I want to have it be in the money, even if we never exit suppression. And I also full well expect we're going to exit the suppression cycle, because there it is. That was the red swap. That was the third swap, in my opinion. This is it. Now, it could be this, or it could be in another week. If it's in another week, then I have the perfect setup for a leveraged options position, and I'm going to wait and see if I can get that. If it is not in another week, then fine, I miss out. Okay. What's the follow-up then? Check out the data plane. There is nothing here. The next call out that was sitting here still from Richard Newton is on 11.5. Does that line up with the model still? The model call out starts on November 3rd instead of 5th. The 5th is right here, so it does almost line up. I could see it. It's hard for me to tell. It is not my call out. That is somebody else's call out that is still sitting there. My personal call out is I want in by the 24th on calls, somewhere close to the cash value of the stock, which for me, if I go to my cash plane, it is $22.63 a share is the cash value of the stock, in my opinion. Anything less than $23.25, I'm happy. I'm just happy with that. If I go into my trades, I want probably a strike 24 or strike 25. I want it to be in the money at $26.50 a share, because if I open up the model, we can see, not in the money. Yeah, I want it net positive, not in the money, my bad. I want it to be at a gain at $26.50 a share, because the final suppressed price is $26.68. So I want to have gain available for myself, even if we end this entire cycle still suppressed. So am I gaining at 26.50 a share if I get calls for either strike 24 for $1 or strike 25 for 60 cents? And like those will be out of the money options at the point at which I would buy them. And yes, there is plenty to gain here. And there is, let me move this down to 150k instead of 180. I don't think I'm staking 180 this time. Yeah, there's plenty to gain here. There's plenty for me to do here. There's plenty for me to play around with if the model is correct. And models can be wrong, so I have to be willing to lose this amount of money. And after losing this amount of money, it's a little bit hard to stake 300k again. I'm not made of money. All right. What's the follow-up then? Where are we? Where are we? Where are we going? My personal opinion, we're going to stay suppressed another week. Whatever the fuck is causing the GME 1 chain to blow the fuck down, it's going to stay. It's going to stay for another week, in my opinion. And honestly, I think we're going to start trading around this level for the entirety of next week. I could be wrong. We could rally. We could exit suppression cycle all at once. And honestly, let me show you what would happen if we exited suppression cycle all at once. The non-suppressed price, in my opinion, for my modeling, is 27 a share. We could jump to 27 a share within the entirety of next week, and I would have nothing. Like, this would fit everything fine because we did just enter a fuck ton of downwards pressure. I just don't think it's the swap. I don't think this is our swap. I think we're going to go down, and I think we're going to go back up, and I think it's going to be, hey, that's our swap on the 20th. And then everybody would retroactively say, well, that was the swap instead. And is that common for us? Is it common?
Hello.
Is it common for us to...
Oh, I think he's on a phone call.
Oh.
Is it
We're just
common
annoying
for
now.
us to...
Well, I keep on wanting to try out code names.
And then go back down and spike up again. Yeah, it is pretty common. It is common for this model to spike up, go back down, and spike up again. Is it common for the bottom finder here to not to false, but to find multiple bottoms in succession? And yeah, it can happen. It is possible. And so, even if it's crazy, I'm saying this is the timing. This is the number of days that I expect for a real swap to occur. I'm going to hold to that. And I'm going to call out that we're going to see a double top here. We're going to see a regression from this, and then we're going to top again when the ETF model is truly bottoming. Now, is this a fantastic time to buy shares? Fuck yes. If you can ever buy shares anywhere close to 2 times the cash value of the company, all means fucking go for it. Like, this is a fantastic time to buy shares. Fuck, Richard Newton bought for $22.55 a share, and that's like, it's under 2x the cash value. He did phenomenal with that trade. He might even have that trade in permanently to say, hey, you're not allowed to go this low. You're not. He may always have $1,000 or $2,000 bet on, hey, if you go below this number, like, here, let's say this, min, buy. He may always keep a buy order, a limit order in. Here, let's say limit order. He may always keep a limit order in to say, hey, I'm going to buy some shares at $22.50. Drag this down. Right to here. Hey, I'm going to buy some shares at $21.80. Drag it down. Is this a way somebody could trade the stock? Hell yes. Could you make money? Hell yes. And then we could go into here and we could add another column to the right and say, let's do a buy order. Let's have a permanent buy order open. Let's have a permanent sell order open. Because this is how he used to trade. He used to trade to like skim off his position whenever the price was high and and add to his position whenever price was low. And so what would be a high price for us? Well, let's look at what our models go to. If we are not suppressed and we are in a peak, we jump to 28, 29, 30, 31.85, 31.9, 31.8, 31.87, 32.7. Let's say 32, okay? Have a permanent sell order in at 32. This is not the right tab. This is the right tab. 32, drop that in. Drag it down. Drag it down until the number changes. And then, hell, say 28 for this. Lock it in. Drag it down. Go up here. Do I want 22.5 going forward? Hell yes, I do. So grab all of these three, drag them up. How long? until next earnings, easily. If you're trading like this, you can easily make money. This is like, and it's not easily make money. This is just swing trading a company that's valued massively in cash on hand, and where the entirety of the debts for the company could just be paid out in dilution, and still have a low debt company. I see low risk in this. I see something that a trader would do, but it's a low effort trader position. I just am not a degenerate. I'm a swing trader, and so I go in when the swings are large, where I can pick up a 23 and change position, and I can leverage on it with options, pay maybe a dollar and like maybe 45 cents in overhead on the options for that contract, and then get rid of it at 32. That is very attractive for me. For me, I'm open to losing the entirety of the underlying for the possibility of turning 150K into 1.2 million. That's it. That's how I play this game. One or two of these wins covers a fuck ton of loss, but that makes me a gambler. A gambler is somebody who only trades a handful of stocks. A gambler is somebody who's more willing to see losing everything than taking a small gain. That's what I am. And I don't want to hold back about this is bad behavior. This is degeneracy. This is degeneracy. I intend to be a degenerate. This is a blast for me. All right. The play, right? My anticipated outcome is next week I see a swap. Not next week. That is 20th to the 24th. I see swap. I see the swapinator light up. I see the price drop below $22.75 a share, and I pick up hand over fist calls expiring. When is this? The 14th. I pick up everything I can for calls expiring on the 14th. If I see all the stars align, fuck, I'll increase the position size and go wild with it, right? I went wild with it last time, but I was a jackass on getting rid of it because I assumed we would exit suppression cycle, and I was wrong. But this is it. This is what I want. All right. Let me know how I can support you. Let me know how I can love you. If this is just me ranting more about the stock, let me know. Take care, everybody.